Welcome to the Beat the Banks podcast. I'm your host, Kyle Fuller, and I've got the one and only Tarissa Shelton in here, who, if you didn't know, is one of the youngest certified infinite banking practitioners in the country, which I want to talk about. But also, Tarissa, one of the things that I hear so much from prospects and clients we work with, when they see what we teach here, they see that truth and they go, oh my gosh, I wish I would have known about this 20 years ago. You were one of those rare individuals who did learn this like at that age where a lot of people wish they would have done this, because a lot of people we're working with are 40, 50, and they're saying, if I could go back and be, how old were you when you started?
I think I was like 22, 23.
22, 23 to be in this. So very unique. And you're also one of the youngest certified practitioners in the country. So I want to know from you, tell me about your story, your journey. How did you get started in infinite banking? I remember the first time I met you at a presentation you came to, but I want to hear it from you. What was it that drew you to that first conversation? And when did you start figuring out, oh my gosh, this is definitely something I want to do, but also teach?
I think it took me a while to get to where I'm at today, but I think a lot of that came through watching my family do the things that traditionally we're taught to do, which is go to school, get a good job, get a 401k, and it's all going to work out. And there was a few examples that I remember very clearly that just really rubbed me the wrong way and had me start asking different questions. So the first thing was my dad, he made the majority of the income in our family, and he got really sick. And he tried to access his qualified plan monies, and I don't think that he was able to. He didn't qualify for it, or he was going to be massively penalized. And I just remember that was a very stressful time in our family because of that, right? It's like if you lose out on your income earning potential and then you don't have the ability to get access to money in a place where you thought that you could, that has a huge impact on a family in a time of need. And then the other thing was my sister and I had 529 plans for college, thankfully, which we're so grateful for, is set up by my grandpa. And she was going to U of A to go to school, and she was going to be there at least 5 years because she was going to get her master's degree. So we are always talking about ideas on like how to generate income and just being more efficient in life. And so we had a discussion around purchasing an investment property close to her college town and just having her rent out the room so that she wouldn't have to pay for monthly expenses in terms of where she's living. And we were under contract actually in one of these houses, and the gentleman that was doing our loan said, hey, you're unable to use these 529 plan funds for a down payment on the property. And that was the intention, is to use the 529 plan funds as a down payment and to use my income at that time to back the loan. So I think just being told no in so many different ways really lit a fire under me of like, this doesn't serve our family in the way that it's supposed to, and there's a better answer out there. So I started just doing as much research as possible. And it was actually Garrett Gunderson that I first heard about the idea from. He wrote Killing Sacred Cows, and he's such a cool guy. Anyways, yeah, he's like, I saved up inside of my whole life insurance policy for a car that I wanted. I borrowed against that cash value, and then I paid myself back with principal and interest. And in that moment, I just had such a huge aha in terms of, if you're able to redirect that amount of money back to yourself throughout your lifetime, you're going to be so far ahead of people financially, because everyone is doing it in the opposite way, right? We're taught to save 10%, but we're spending 90. But in this case, it's like, okay, still save a larger amount, but redirect 30 to 40%. That is a huge economic difference. So I believe that was like 2017, 2018, where I finally started realizing that this was possible. So yeah, that's kind of how I stumbled upon the journey. And Monty Flack gave me the Becoming Your Own Banker book, and I went to an introduction presentation that you were both hosting. And I still remember clear as day the example that you laid out of the difference between paying cash, financing, and using infinite banking as a process for your how you conduct your financials. And I just remember seeing, when you pay cash, that line start over at zero over and over and over again. Or when you go into debt, the same thing. And I'm such a visual person, and I felt that because I paid cash for my college education, like 30 grand that I wish I would have put in a policy first. So So yes, that's my long-winded way of kind of coming into the infinite banking world and just realizing like this is what I've been looking for, something that actually works for people and that's guaranteed.
I love it. And I want to touch on a few points because I think this is what a lot of people get drawn to are strong leadership qualities, because you were young in life to have those types of thoughts. So one, you were obviously very entrepreneurial. If you were thinking, hey, why don't we go buy a rental property with my sister that would support our college, right? I don't know that many young 20-year-olds who think like that, for one. So I think a lot of the people who end up really enjoying the concept of infinite banking are entrepreneurial. They want more control in their life. They want to make the rules, which is all banks do. They make the rules when it comes to money. So I think people that have that same mindset tend to gravitate towards what we teach. And so you were talking about having a lack of control in your savings environment. You had this 529, your parents had retirement programs. And when we talk about the benefits of whole life and shifting that and using that as our primary savings environment, we get those 8 benefits: constant compounding, liquidity, guarantees, that flexible loan provision that you referenced Garrett Gunderson was using to pay for to finance a vehicle, privacy, a passive income stream, a death benefit, and also a very high savings rate. And so when you take that environment of savings, this is what was solving or going to solve all your problems, right? One is changing your mindset, but then the environment in which your savings resides. And so by having a different savings environment, your plan was to use that 529 to put a down payment on to create cash flow to support your college. Like, wonderful, beautiful. But the problem in that flow was the savings environment.
Absolutely.
We don't have all that control. Other people are making the control for us. And that's something that did not sit well with you. So you started looking.
Yes. Yeah. I started looking because, like you mentioned, those benefits, it's like one of those things. I think we do these actions and everything works until it doesn't. And there was just too many examples that I had seen of it not working.
Yeah.
And so it's just so important to really ask questions before you put a large portion of your life's earnings inside of an environment.
And what you're describing there is like one of the key components of wealth building that we teach is it starts with one, education, and then awareness. So before we go do anything, because I had a similar story with my Roth IRA when I was 16, I was just told to put money in there from someone that I knew and trusted. And he said, hey, if you want to retire early, start funding this now. You can retire with tax-free income by the time you're 40. And I was like, great. And it was great until it wasn't. And that market shifted and I lost 40% of my value. Now, as a high school kid saving up thousands of dollars when I could have been having fun, lots of new clothes, probably a car, right? Then I lost all that. I had to really reconsider what I was doing in life. And so we had some similar experiences that caused us to stop for a second and say, wait a minute, something doesn't feel quite right. And once you're on that path, when you see the truth, you'll never be able to unsee it again, right? And that's what happened to both of us. And it's why we went into also teaching and educating about this, is because when it changed our lives, now we want to say, how can I help other people behave like this, think like this, and live this life that really gives us ultimate freedom and control in the money game? Like if we want to reduce it, like that's what we were after. More protection, more guarantees, more control, more certainty. And that all comes with the mindset of infinite banking, right? Which is what we teach. People, I think sometimes people get hung up on IBC being a product. IBC is leveraging a whole life policy. Well, no. Infinite banking is a mindset. It's how you view that control and that flow of money in your life. Next, there's a set of rules you want to follow, which we're going to talk about banks in just a second. Banks follow a certain rules, so we need to follow certain rules with our banking system. And lastly, it's a product. If you insert the whole life policy, which to us is the greatest savings environment, into that rules, those rules and that mindset, you get something really beautiful. We call that infinite banking, right? It's a complete paradigm shift for most people.
It is. And I think sometimes, unless you've heard of it or you've been around that world, it's sometimes a little bit, it's like when you hear those two words together, you're like, what does that mean? And so like you said, it's a multi-layered thing that makes up infinite banking. It's not just the product, not just the process. It's all of those things, the product, the process, the mindset. And I think the community as well that we've created has been a huge part of reorienting how you think about money in a way that actually can serve your goals in the future that you see for yourself by adding so much freedom and control.
That's a great point you make, because if you can see our banner behind us, one idea that we believe in is that life includes 5 areas: spiritual, personal, family, financial, and occupation. And if you want to wake up and live the ideal lifestyle, you got to create abundance in all those areas. And what do we always say is the most important thing in every area? The relationships. So great, you're doing IBC, but it's even better when you have a community of people who are also doing it with you.
Absolutely. Because then you don't feel so alone. I always think about the early adopters concept, which is like, when the iPhone first came out, there's very few people that had the iPhone. I think that must have been the version 1, which is crazy that we're at 13, 14 now. But I think infinite banking is in that kind of stage right now. I think a lot of people are starting to look for this because they've been burned in so many different ways by what they've been taught to do. But it's an early adopter thing. And so it's great to have a group of people that are intentional about growing, intentional about sharing the information and how we use this process. So I think it's amazing. And I think it makes a huge difference in your life when you compare, what does your life look like without using infinite banking? What does it look like when you're using infinite banking? What does it look like after? For me, I'm such a big conceptual thinker. And if you think about just the trajectory of families with these differences, I think it's so huge because I just see for people the life that they could live if they decided to take action and learn something different.
Yeah, and not just different. I'm going to say like wildly different, because this is a paradigm shift when people come in. And if you read the first page of Nelson's book, he tells you that we're talking about becoming your own banker. Yet you're going to need 8 to 10 hours of exposure before basically all the light bulbs go off. This isn't something like in 30 minutes, you're like, oh, I get it. It's like you'll need something that causes a little thought that you're like, wait a second, I've never heard of something like this before. Let's dig a little bit deeper. And the more you go, the more you're like, oh my gosh, where's this been? Right? And so when we talk about like Robert Kiyosaki's cash flow quadrant, you got employees and self-employed individuals on the left, and you got business owners and investors on the right. And what you and I had always been taught prior to knowing what we know about banking is if you want to win the money game, you got to get into business or you got to get into investing. And I'm not saying that's incorrect, but the eye-opening thing for me was all 4 of those players in the money game, they all need the banker in their life, do they not?
Absolutely.
So how come, Tarissa, no one taught us growing up that we could also do that in our life? And by the way, isn't banking one of the most profitable businesses in the world?
Absolutely. Well, if you think about it, like everyone needs cash. Like you wake up and you need to buy something, you have to have money in your account and or a credit card that you pay off later with cash, right? Our need for cash is infinite. The place that holds all of our cash is the bank, and the place that we go to buy cash is the bank. So they've essentially monopolized this profitable business just by taking in our deposits and then upselling them and selling it back to us. Like it's really that simple, but I feel like everyone is looking, at eyesight. But if we just look up and see that the bank is making money off of all 4 of those quadrants, like you just mentioned, then that is honestly the easiest and most profitable business to be in. It's easy because what do you need? You need deposits, you need cash, and you need to charge interest, and you need to redirect that money over and over and over again. So the analogy that I use for this, because I think of volume is such one of those things that you hear in science and you're like, yeah, great. But volume of transaction is such a huge thing. Like I serve tables to pay cash for my college, like I mentioned, and the idea was how fast could I flip this table in order to receive a tip, right? So if I had 10 families sitting there versus 20, the difference at the end of the day was huge. Mm-hmm. But banks do that every single day just by turning their money around. And we are the ones that make all of that activity possible by being depositors at their institution that they then sell us back that money.
And how much benefit would you say right now the big banks give us for supplying that wonderful lifestyle for them?
Right. The last time I checked, it's like 0.01%, and you get taxed on those pennies that you earn.
Yeah. I don't know how they tax 0.01%, but it happens,
they
right?
They figure it out.
And so I think this is one of the major paradigm shifts people have to have when they're learning this, right? Is if you just, all you do is think about what a bank's doing. All we're doing is replacing that same function in our lives with a different savings environment. Because I don't think a lot of people know this, but banks are some of the largest purchasers of whole life insurance in the world. And they're not buying whole life insurance because whole life insurance is an investment. They're buying it because the qualities whole life has more in common with a banking tool or a savings environment than any investment. The banks know this. Like with all that profit, Tarissa, that the banks make, they don't keep their savings with other banks. That was a huge aha for me. I kind of was like, I feel like I've been lied to my whole life. Why don't I just save where the banks are saving, watch what they're doing, and just go do that for my own life? And that's all you and I have really been doing the last, how many years have you been doing IBC?
Let's see. I think I opened my first policy at the very beginning of 2018.
So we're coming into 5 years.
Right. Yeah.
And I'm coming into year 10 right now. And it's like, it is the most simple process, because the reality is we were already doing that stuff prior. We just weren't profitable from it because we weren't the owners of the bank. You see what I'm saying?
Absolutely.
We were renting that function, and we were happy to do it because we didn't know any better. Like you said, if people would stop and just kind of like look up for a bit and like, what's really going on here? Wait a second. We could just go buy the same asset the big banks are buying and then move our money the same way they are for our lives. And let's go into that. What happens when someone does that? Because I want to talk about like your life before IBC, which we talked about a little bit, and now during. But what's going to happen towards the tail end of our life if we understand this now and into the future? Like, what gets you excited?
Honestly, paying premiums is really exciting for me because every single month I log in and I look at all my policies and I see the amount of cash that it goes up every single month just because I've put my money in a place where I don't ever interrupt the earning potential of those dollars. So seeing that growth happen over time is really exciting, and paying premiums is really exciting because we're essentially creating a cash flowing asset in the future. Like you said, the after part of this. And I am excited to get old because of my policies. Like, I just feel like the older I get, the easier life will get. And the more fun, it's like the more you put in, the more you have access to, the more you can leverage for other cash flowing opportunities. And so I say, there's very few things that get better with age. One of them is wine, and the other one is whole life.
You do like your wine, and you do like your whole life.
Yeah. So
I do know that about you.
Yeah. So I think it's great. And I'll never forget, like when I was first reading Nelson's book, and I love just rereading it actually, but in the illustrations that he's laying out and he's going over equipment financing, the input of dollars is the same, but how he's moving the money and the environment that he's putting the money in, that output is significantly different. So when I pass away, I will pass on millions of dollars of legacy to my family. But before that happens, I will have created such a perpetual money-making machine that I can access, during my passive income years. So before, during, and after, it looks way better than what I've seen my parents have to go through, what I've seen other family members have to go through, or just people in general who just didn't know, they weren't aware. And so I think that's why I'm so dedicated to sharing this message, because, I've seen the difference it's made in my life and your life and all the people that were around collectively. And it's such a noble pursuit to help show people how to create the life that they want to for their family. And this tool is the foundation to do that.
So I want to ask you a couple of things, because describe to me what you saw your parents do and what I saw my parents do, and why we made a conscious decision to say, I see that and I got to go a completely different direction. Otherwise, we're going to, not that our parents have done poorly, right? By any means.
Not at all.
They did the best they could with what they had. Both of us would agree to that. But I think in life, we got to, like you said, stop for a second, look around at what's going on and saying, if I keep doing what they're doing, I'm going to have a similar situation, which is why we decided to make a change. So the vehicles your parents and my parents have paid cash or financed to other banks, how much money do they have left over after doing all of those transactions in their life?
Either zero or barely the trade-in value.
Maybe the value of the last vehicle.
Right.
And the reason that's happening is, what Nelson Nash said in his book, you finance everything in life. You're either going to pay up interest to use someone else's money, or you're going to give up interest you could have earned. Now, You were a pay cash girl, and I was a pay cash guy before I learned this. And once you learn that if we pay cash for something, instead of running it through the policy, which you earn that constant compounding or that uninterrupted growth you referred to, those dollars, do they ever leave our control?
Absolutely not.
Never. And does it go up every single year, guaranteed?
Like clockwork.
See, how much peace does that give you when you go to bed every night, when you wake up? Like you said, you check your policy values every month. So do I. They always go up. They have to. Contractually guaranteed, right? That's why we can't say whole life insurance is an investment. But when that cash account is going up every single month, then you and I need to use it for something. We don't take from that policy, right? We borrow against it, which is all a bank does. They utilize loans. So then you go finance a vehicle, and then you pay your banking system back with some interest. And what happens to that policy over that time frame?
You get to recoup all of those original dollars. And so you're never having to, I call infinite banking the process of never having to start over ever again, because that's constantly what we're doing in the way that we conduct our normal financial affairs. If we pay cash, we lose out on that earning potential. If we finance, we lose out on the earning potential and we pay interest for it. But by aggregating those activities, saving money, spending money, financing inside of the process of infinite banking, you're able to recalibrate all of that energy back into your own financial picture.
So let's try to visualize that, because Nelson Nash refers to that as creating a perpetual tailwind. He was a pilot, so a lot of his analogies are for pilots. Right. So if you think about that, it's this energy that you have harnessing working for you 24/7. So because we teach classes on this, when we were running some numbers recently, the difference is easily $500,000 in your life for doing the exact same thing we were going to do anyways. Is it not? Yes. And that's like minimum, because the more I think we understand about banking, the better you become at it. It's like, are you more confident now 5 years in than you were 5 months in?
Absolutely. And it's one of those fun things that there's always a new way to look at it, or something new to learn. Like, I think it's going to be forever intriguing to me.
Oh yeah. I don't think, does the world of banking ever stop?
No, it's been around. Banking history is so much more prominent and profitable than most business history.
Right.
Because they understand our need for cash is infinite. And if they hold the keys to the product that everyone needs and wants, then they are always going to be in high supply because they receive deposits, but also high demand. So it's like one of those things. It's like if you owned an Apple business and everyone was lined out the door to sell you or to just give you their apples. Right. That's essentially what we're doing with banking. We are lined out the door to give them the product that they sell every single day.
And I think it's a good distinction. I think that people need to understand that banks don't even lend their money.
No.
They lend your money to me, and they lend my money to someone else. And so I think when you think about what's happening here, I was a little bit frustrated when I first figured this out, right? Because you're like, I'm going to put my deposits with the bank. And why do we do that? That's what our parents taught us to do. That's what they did. And then the banks take our deposits, they pay us next to nothing, and they go lend it out to the next person. There's always a borrower at 5%, 10%, maybe 22% for a credit card, and they pay us like 0.05. The spread on that is so astronomical.
Right.
Like, it's unbelievable. You'd think since we were helping them become so wealthy that they'd give us a little bit of something, like maybe a little bit more than a sucker. But it's why we choose purposely to save with strong mutually owned insurance carriers, right? Because when those companies are profitable, and they have been for 150 years, you and I get that profit back in the form of a dividend inside our whole life insurance policy. So it's like becoming a mutual owner of a bank. Chase Bank has never given me anything for leaving quite a bit of money there, right? And so this process we're talking about does not happen overnight. You're 5 years in, I'm 10 years in. My mentors that I learned from, some of them were third generation into this. And you see what's possible just by changing the mindset. That average family is going to spend roughly $400,000, give or take, on vehicles in their lifetime and see nothing. My parents are in that situation. Yours were in that situation. But us, with the same input of dollars that you referred to earlier, about 400,000 for vehicles, will produce your family and my family closer to $1.5 million just for me and just for you. Now, you take our spouses into that situation, any kids we might have, take that $1.5 million and now times it by the number of people in your family. And this is why we say this is not an investing conversation. You always say this great. It's a controlling the flow of money. It's redirecting that energy that's working for you in your life that right now just flows right through and it's gone.
Absolutely. Well, I think if people at the end of the day were able to look at both avenues and say, here's a savings account. If I put money in it and I spend it, it goes down to zero every single time. Or here is an account where I put my money in and I never have to start over. I can always be adding on to what I'm earning. If people could understand it that simply, they would pick the second option 10 out of 10 times. But I think it's, like you said, it's challenging the way that we think about money. That is what has people, I think, be more curious about why whole life. But like you said, there's those 8 benefits. And when you look at the flow of money over your lifetime, like you mentioned, or your family's lifetime, the sooner you can be that leader in your family, the better it gets for future generations. It's like if you're saving money, maybe you're putting, 10 to 20 grand a year inside of a policy for you and your husband or my husband, and then you have policies on your kids. By the time they have grandkids, it will just take such little premium for them to get to those same numbers of death benefit for someone starting later on in the game. And so essentially what you're doing is you're creating this everlasting tree of cash, really. There's always going to be a death that happens in the family. And when that happens, that tax-free income can then pass on to other people for them to then put into their existing policies or start new ones. And it's just a thing that keeps on giving. And when I first learned about infinite banking, I think that's why I loved it so much, because it wasn't just something for me. It wasn't just something for a few people. It's how I saw the generational power of what that financial momentum can do if everyone can be on the same page.
It's a powerful concept. And I think, that book, What Would the Rockefellers Do? Which I think it's been changed now to what would billionaires do? Because I think the Rockefellers actually reached out to him, Garrett, and said hey, You can't be using our name. And which is interesting, right? But if you go study those big banking families like the Rothschilds, the Rockefellers, what you just described with that flow of money, multi-generational thinking, education, really it comes down to just keeping your family closer together, right? Because one of the reasons why I love IBC is that it's actually brought my family closer together through a conversation around money. Isn't that so backwards to what we normally hear? Don't talk to your family about money. Money's a taboo subject in most households. But what you and I are doing for our families is we're changing that mindset around it. And if you start studying some of the wealthiest families in the world, those big banking families, what you'll discover is what you just described, they've been doing for 6 or 7 generations. And it's why they're all billionaires today. They stay very private. They're just controlling that flow of money. And so I want to jump into a couple definitions real quick that we've come up with, because I think one of the biggest misconceptions that people have, Tarissa, when they first start learning about this, is they automatically compare whole life and infinite banking to some investing strategy or investing asset, right? And so what Tarissa's talking about right now with controlling this flow of money, we would say it's a banking conversation. And so when you understand banking as a verb, what we're talking about is intentionally keeping that flow of money permanently in an environment that you and I have complete control and accessibility over. That's what it means to be in the banking position. So if you think about Wells Fargo or Chase Bank, our deposits come in, they control that flow of money. Some borrowers come from the other side, they lend it out at a higher rate of return, and then they make their money and they pay us next to nothing. And they're just inserting themselves as that banker in our lives. And we can literally move them out of that position and go own it ourselves. And now all that control, that flow of money, directed to a whole life insurance policy with those guarantees, the private nature, all those 8 benefits, every dollar that goes in there, now you're harnessing forever that earning potential, or what you call energy. Like think about, give me that analogy that you always give when we're teaching in front of like a large audience of like that.
Yeah, so I'm very conceptual. So what I like people to do, because when Nelson says you either pay up interest or you give up interest, it took me a while to kind of wrap my head around that idea. So if you're listening to this, hopefully you're not driving, but if you're sitting down, I want you to stop for a second and close your eyes and think about all of the money you've ever earned and you've ever spent throughout your lifetime. And actually put a number to that. So if you're earning $100,000 in 10 years, that's $1 million. Put a number to what that amount looks like for you as an individual. And then of that money that has passed through your hands, how much of that do you have access to today? Now, what if you put between 10 and 40% of your income inside of an environment where you earned uninterrupted compound interest? Same amount of money. Would you have more money today?
A lot more.
A lot more. And that's the thing that people need to understand is that no matter who has that environment that you're flowing money through, that action is happening no matter what. The question is, do you want a piece of that pie? And do you want a piece of that pie indefinitely?
Right.
Because I do. Because it has to happen. The flow of money has to happen. And whoever is in that banker position is making the most money off of your flow of money. So why not put yourself into that leadership position and into that driver's seat of your own financial future?
And that's what we refer to as owning the banking function, right? I think people, when they first hear about this, I think that one of the reasons why it seems so foreign, and Nelson Nash talks about this in his book, Becoming Your Own Banker, is that when you talk about banking, people go to like the brick and mortar building on the corner, Chase Bank. You know, it's like, if you want to go get a bank charter, you need like $20 million. You got to wait in line for like 10 years. You have to have tons of connections. And even then, your likelihood is still low because there's so many other people who want to do that. So we never even we just oh, whatever. I can't do that, obviously. All we're saying is changing the savings environment of our money and then understanding that flow of money that you just talked about. Last 10 years, if someone made $1 million, if they had put 10 to 40% of that into that whole life insurance policy where it's captured, harnessed forever, how much money just in a 10-year window would that person still have access to now and in the future? So now you and I go out another 10 years and another 10 years. And what's happening during this process, because one of our other agents has brought this up, David Zapata, about the words becoming your own banker. He always focuses on that becoming, because you 5 years ago were not the same girl you are today. Same with me. 5 more years, 10 more years, we're going to be so much better educated, so much more aware, so much more comfortable with our banking system. You're able to do things then than you would never be able to think imaginable now. So understanding that control and that flow of money only gets more aggressive in the future. And when you understand that, you can capture and harness even more dollars. And which is why we say this has nothing to do with investing. So when you understand what you just went through, which I think is one of the best analogies that people wanting to learn about this can go through, is imagine that flow of money coming through. All we're doing is we're keeping a piece of that. And like you say, how much of that pie do you want? You want a little sliver? You want half of it? Like that is all dictated by you.
Absolutely. And I think that's the other fun thing about this process is because you're putting yourself in that position where you have 100% of the control, you're 100% responsible for how your system performs. So Nelson talks about that in his book, right? The difference of the two vehicles. If one car is driven and it's not maintained well and you don't do the oil changes or anything like that, and you drive it really aggressively, it's not going to last as long as a vehicle that you take very great care of. And this is one of those things that if you take great care of it, it's going to take great care of you. But you have to be disciplined in implementing the profitable banking rules, which is, don't be afraid to capitalize your system, pay yourself interest, and redirect money that is once outgoing to someone else back to yourself. And I would say focus on things that you can take that pool of money and either invest in other things that are producing cash flowing monthly for you, whatever that may be, or whatever it is that you are super knowledgeable about.
Yeah. And that's where I think it gets really fun, because this is not an either or conversation we're having. It's an and. So we're talking about controlling that banking function in your life. And once that pool of capital, because like I used to save in a Roth IRA, you used to save in a 529 plan. We got to a point where we needed access to money, but we couldn't get it because the environment it was in, because we were now in a position of opportunity, right? That's exactly what we experienced. So now we've shifted to this, I'm going to say, more superior savings environment. We're building up the cash values in our policies. They grow guaranteed every single month. And now we have an opportunity to go invest. So let's talk about our definition of investing, Tarissa. So investing to me is a verb. And the definition we came up for is intentionally separating your control of money with the expectation that more money returns in the future. So let's contrast that definition to the banking definition of intentionally keeping your flow of money permanently in an environment where you have complete control and accessibility. Those two definitions are polar opposites. And this is where I think people get hung up. Once you understand banking, you and I have this environment with constantly compounding, complete control and accessibility of our money. Now we have the opportunity to invest. And you and I are only going to invest in things we know and understand. That's how you limit that risk exposure, right? So we have this opportunity. Let's say it's a rental property, because I know you own real estate. So you access your policy loan. You're working with a professional that's helping you buy real estate. You buy the property. It produces cash flow. What do you do with that cash flow now?
I just redirected back to my banking system.
You don't flow it through a checking account or a 529 plan?
No.
Absolutely not, right? It's like we just got out of that game. Why would we want to get back into it? We are now controlling the banking function while we invest.
Yes. And when you marry those two together, it's so beautiful, because banking, like you said, banking to me is you're sending money in, right? You're sending money in, you're capitalizing something. Investing is you're sending it out. So when you can...
Say that one more time.
Okay. When you're banking, you're sending it in. You're sending money in.
That flow of money comes to you.
Right.
Permanently.
Okay. But if you're investing, you're sending it out, usually to something that you have less control over.
Right.
That's a difference. And you're right. They're opposite actions. But by doing both, you're able to play such great offense, defense in the money game, because let's say I were to purchase that rental property without having those down payment funds in my policy first. And let's say the deal goes south. Well, I've lost so many things. I've lost my ability to earn on those down payment funds indefinitely, or as long as I live, right? And then when I pass a tax-free death benefit. But I've also lost out on cash flow, and I've put myself in a very vulnerable position as an investor. Whereas if I can be the banker and the investor, I have those down payment funds working for me as long as I'm living, and I have a place to put those funds back so that I can re-access them again to do the same thing in a more aggressive fashion.
While all your previous deposits into your banking system are still working for you.
100%.
That analogy is so spot on, offense and defense. Because when you just said that, I was like, oh, I've never heard anyone describe it like that. Because I think like when you go to invest, you're playing offense. You're trying to score, like you want income, you want cash flow to support your abundance in the 5 areas. But the banking is the defense. I'm going to say it's the greatest defense ever because it can't ever lose. Like you kind of need both of those if you want to like win a lot of games, right? It's a great analogy that the investing is the offense, the banking is the defense. Like imagine if you went out just playing offense.
And you have terrible defense.
You have to score every time if you don't have a defense that can stop anything. Or this is why we put whole life as the foundation, right? It's like it's there to protect you. And so that was, I don't know, that kind of just blew my mind. That was a great analogy on why you need banking and investing in your life. Really cool. So I want to ask you one more thing as we're going through this. We're talking about controlling this flow of money, owning the banking function in our life, using it for things like vehicles to redirect that flow, using it for investments. But this entire time this is happening, there is an income tax-free death benefit that's also building every single year. Like, I don't think this part gets talked about enough because we're still in the life insurance space. And so the way I look at it is like, also the legacy for my family and your family is going up substantially every single year. So we're banking, we're investing, we're creating more cash flow, more control, more certainty in our life. But the legacy of what we'll leave the next generation is also increasing every single month. And why is that so powerful for people like you and I? Because I know quite a bit about what you want to do in your life and communities you want to impact and teach them through education. So speak to that part, Tarissa. Like, what about that gets you excited?
I think that having access to resources allows people to dream and to be intentional about carrying out those actions in order to make their dream a reality. So the power that I see of this is each generation, you don't have to start over, which means, if my kids want to go to college or start a business or whatever the case may be, there's capital available to them for them to grow into the person that they want to be, and they can live in their own unique genius in creating value in the world. So I just see it as this indefinite pool of resources that can then allow people to take the worry of money off the table, to live in abundance instead of scarcity, and to just take that responsibility and put a lot of value into the world to impact other people. So I just see it as this amazing positive ripple effect over time. It's like one of those things, it's like this beautiful waterfall that just keeps getting bigger and better every single generation is how I look at it. And I get excited about that because I always think about what would my life look like right now if my grandparents had known about this, if my parents had known about this. And I'm so honored and grateful that I can be just a channel of passing on this information to clients, to my own family, to friends, because it makes such a difference. We have to do all these activities no matter what. We have to save, we have to spend, we have to finance, we have to die. And when you create an environment where if you're able to take advantage of the flow of money that you have no matter what and use it for those things in life and pass on tax-free death benefit to your family, I just see it as the ultimate win in life, honestly.
It's so powerful. And, I think there's two types of mindsets, and I want to close with this. There's two types of mindsets out there. There's the people that are like, we'll use it as a victim mentality and, I'm too old for this. And if my parents would have known, I would have been in a better situation. And then there's individuals like you, Tarissa, who move fully into that leadership position and embrace it. And they actually consider it an honor that I'm the first person in my family who's going to do this for everyone after us, right? That, to me, is one of the most compelling parts about what we do, is when you find those other people. And it's why so many people are attracted to you as a leader, because that is how you operate. And there's that proverb that talks about, the person that plants a seed knowing they'll never sit under the shade of that tree is starting to understand the essence of life. And I feel like that's kind of what you're describing here is, let's be honest, we're going to live really good owning the banking function in our life while we're alive. But the generations coming after us, like you said, so you're generation 1, I'm generation 1. We got generation 2, generation 3 coming. And I guarantee you they'll look back at us saying that is who started everything for our family. Because those kids will grow up without needing to enter the perpetual debt cycle that most Americans are born into. Someone in the family has to do something different, understand this is going on, and take the lead to build it for the next generations. And is there no better calling in life than to build something so big that affects people long after you and I are gone? Isn't that one of the coolest parts about what we do?
It's amazing. And it makes it exciting to wake up every day because we have this information. I do believe that we have a duty to share it because someone shared it with me and graciously gave their time. It's like the gift that keeps on giving.
Yeah, I love it. And, going back to, you were saying like the early adopters and stuff, I often think about Nelson being on his own doing this like decades ago. And here we are, a couple of byproducts of what he taught. And now we are impacting hundreds and thousands of individuals now because of what one guy went through who said, there's a different way to start doing some of this stuff, And so you are that person for everyone in your family and in your life. I'm that person for everyone in my family and my life. And to me, it's such a leadership calling. And it's just, I love what we do. So do you. Incredibly fulfilling. And so if this conversation was intriguing to you, you enjoyed what you heard, make sure you subscribe to our podcast to get future episodes, and also check out our free video courses online, factumfinancial.com. All these conversations Tarissa and I just had are all there in video format with all the numbers that you'll ever want to see, so you can put some analytics to this conversation that Tarissa and I just had conceptually.